Hello everyone, this is Jay and good morning. It's Friday, which is my favorite day of the week. On Fridays, I usually make a deposit into my investing accounts and then I review my portfolio to see what's undervalued or what am I going to allocate that money into. I also want to review a stock suggested by one of my longtime subscribers. So this is going to be a nice one today, but let's go right into it. So right here, as you can see, these are all of my holdings right here. The very small one right here, it is Visa, which it doesn't show yet, but it is right here in yellow, a 0.6% of the portfolio. I did not buy any Visa this week, but spoiler alert, I am going to buy some more this week, even at all-time highs. So let's go right into my portfolio right here. And as you can see, this is my portfolio. I'm in the green by 1.35% right now. Pretty much SCHD is in the green. Right now I see SCHD is already at $77. I think their 52-week high is 78. They reach as high as around $80. So they're almost there. They're almost at their all-time high right there. I remember when SCHD was at $69, $68. I used to see videos in YouTube of people selling it. No, don't invest in SCHD. This doesn't perform. I don't know. I was buying more and more and more. I'm I'm the channel that once he goes in the red, I kind of get excited. Actually, I want to buy more, especially of good companies. If nothing changes, if the numbers are still doing very good as a company and everything, I like the company, I'm definitely buying more. I don't get nervous when it goes in the red. So, Realty Income is one of those companies. Right now it's at $55.25. So it went down again. It took another dip. I am going to be buying some more honestly. I want to continue buying these prices. I know I put a pause when it was around $57, $58, which it was around my cost. My cost is $58 right now, $58.11. I have put a pause, but now that it went down again and I was able to build for a couple weeks or like 2 months, I was able to build some of the other positions. I'm going to be putting some more into all Realty Income because once interest rates start cutting, which is what everyone is expecting, the real estate sector is most likely going to start going up in price, and that's what everyone is pretty much expecting. So I kind of want to build the position a little bit more, and then I'll let dividends do their job, right? They pay a monthly dividend. This company right here, Old Realty Income, if you're not familiar with it, it is in the real estate sector. They just acquired Spirit Realty. I believe that the deal closed already, so that's going to be another over 2,000 properties that they're going to be acquiring. So that's going to be good for business, I'm sure. And all Realty Income, in my opinion, have a very good management team. They have been paying dividends for over 2 to 3 decades. So to me, this is a company that is pretty safe as of right now, right? Nothing is safe in the stock market. No stock is safe or ETF, right? But I feel like this one, in my opinion, and for my portfolio, is one of the safe ones. My other one, it is in the healthcare, which is gonna be these two right here, J&J and Pfizer, PFE. They're both in the red right now, so I want to continue buying some more to continue to bring my costs down. Right now, Johnson & Johnson, it has been around that $158, $159, and $160 price for the past couple of weeks, pretty much. So Johnson & Johnson, I have 5.1 shares. My cost per share is $160.27. So I'm gonna be buying a little bit more of Johnson & Johnson. I unfortunately cannot deposit too much this week. I can only do my $100 deposit, so I'll probably do a small buy. Same thing with Pfizer. It is at $27.29 as of yesterday, Thursday, that it closed. I have 13.3 shares right now of Pfizer. I'm doing pretty good with Pfizer, actually, building that position right there. My cost per share is $33.55. So I'm in the negative by $83, which equals 18% of my position. I'm just going to continue buying, continue to bring my costs down on Pfizer and Johnson & Johnson. The healthcare is kind of still getting hit a little bit, not too much, but still getting hit. So I'm gonna continue building those positions right there. And one of the subscribers, one of my long time subscribers, pretty much, suggested one in the healthcare sector, which is right here in the updates tab. And this is Maytech, of course, Maytech. This is one of my longtime subscribers. He's been commenting since I pretty much almost started the channel, I believe. So Maytech is one of my very long time subscribers. So Maytech Express just bought new stock into my portfolio, and I'm so excited. I'm excited too. I'm excited every time I add a position to my portfolio. Had only $110 to invest, but I hope the dip continues and I can buy more next month. Oh, nice. That's awesome. $110 is $110. I'm telling you. I've been doing my strategy's been $5 into stocks every week on a weekly basis or whatever I can, and to me it works definitely. I am already up 5% just in 2 days. The stock I bought was UNH. I was waiting for about 2 months for a nice dip. I would love if you could look it up. If you could look it up your next video and say your opinion on it. Also bought $110 of Visa, which is awesome. One of my newest positions, and I love it. $60 a day before earnings and $50 after this 2% dip. Nice. I have an average price of $241. I wish I would have added. Yes, I know. I was mentioning Visa quite some time ago when it was in the 250s, and I never added it until now that it's at all-time highs. And it's my fourth biggest position. See, I am happy. I am very happy, and I don't think I will be buying more anytime soon. Have a nice day, everybody. All right, Maytech, so I hope you have a nice day also. So let's go right here into my stock analysis tab, which is the website I use to look into stocks. Pretty much, it's a free app, or a free website actually. I'm not affiliated with it, but this is one of the ones that I use. UNH is the ticker symbol, the name of the company, United Health Group. This one is in the healthcare sector. And market cap, $469 billion. Earnings per share, 2304. PE ratio, 2201. So the earnings per share is higher than the PE ratio, which shows very, very good signs. Forward PE is 18.59. So I guess they are maybe thinking that there's going to be some undervaluation or it's going to trade at a cheaper price later on. Dividend right now is 1.48%, $7.52 a share per year. That's nice. Definitely one that probably if you bought a long time ago and you're getting $7.52 a share per year, you're definitely very happy. The 52-week range right now, 52-week low up $445, 52-week high $554. So it's pretty much kind of like in between. So kind of like in the middle. The analysts are calling this a buy, this company right now. Their earnings date was on January 12th. Ex-dividend date passed already on December 1st, 2023. So let's go and see at their performance. Let's take a look at the 5-day. The 5-day performance, it's up 2.81%. In the last month, it's down 6.61%. In the last year, it is up 2.61% only. And then in the last 5 years, it is up 90%. Wow, nice. If you see this chart, it looks very, very nice. If we open the max, wow. Now, can you believe this company was trading at $4 a share in 1993? Imagine if you would have bought in 1993 and held it until now. Wow. The gains, you will be getting more dividend in a year than what you own in shares. So that would be crazy. That's why Warren Buffett always says buy and hold. And so many of the great investors advocate pretty much for the buy and hold mentality. Buy, hold long term, and you'll see some nice gains. But as you can see right here, it just goes up and up and up. This is a very nice sign. I really like when companies stay steady going up. Whenever they take a dip like this one right here, right? Like what happened in 2019, 2020. I usually like to buy those dips when everybody gets nervous. And if it is a good company, let's take a look at the financials real quick. And as you can see right here, the revenue, that looks awesome. It just continues to grow and grow. In 2014, $130 billion. In 2019, $242 billion. And then it just continues to go up. And in 2022, $324 billion. I don't know, they haven't updated it to the 2023, but I'm sure it continued to go up. The shares outstanding, let's take a look at the shares. So as you can see, they're not diluting shareholders. They're also buying back shares. In 2013, they have, how much is this? 1 million shares? Let me see. Yeah, this is like 1 billion shares, pretty much. 1 billion shares, and then they went down to 986 billion in 2014. In 2019, 966 million shares. And in 2022, 950 million shares. So they have been buying back shares, which is awesome also. Let's take a look at the earnings per share. If you see, they had in 2013, 5.59 earnings per share. It continued to grow up. 2018, they have 12.45. And then in 2022, 21.47. So they continue to grow their earnings per share. Let's take a look at the free cash flow. And that free cash flow is looking really, really nice, actually. 2013, they had a 5.6 billion in free cash flow. 2016, 8 billion in free cash flow. Then in 2019, 16.3 billion in free cash flow. And then in 2022, 23.4 billion in free cash flow. So this company just continues to grow and grow and grow. Let's take a look at the debt, at the total debt. So the total debt, it is growing. This might be a company that uses debt to make, to buy more assets, like newer companies. It's in the healthcare sector. So a lot of times they grow by buying other companies. So let's take a look. $16 billion in debt in 2013. $31.6 billion in debt in 2017, $43.4 billion of debt in 2020, and then $57.6 billion in debt in 2022. So they have a good amount of debt right now, but they also have some good cash flow at 23.4. I would like to see the 2023 numbers. I'm guessing they'll probably put them within the next month or so. So I'll probably take a look at it again. But I really, really like this company. I honestly, before I give my opinion, let me see the forecast right now. So the analysts are calling this a buy, of course. This is a consensus buy. And the lowest price that they have for the next 12 months is $480, which is not far from the $507. The average, it is $577, which is way above what the price is at right now, and the high $650. Wow. I do think it is going to be closer to this average, in my opinion, especially with the way it continues to grow, or even closer to the $600. The dividends, let's take a look at this. 1.48% dividend yield, $7.52 $7.52 dividend per share a year. The payout ratio is only 32%, so they only use 32% of their free cash flow to pay out their dividend, which is definitely great. That looks really, really good. Dividend growth 13.9, almost 14% in the last year. I would like to look at the 5-year also growth rate, but if they do this in a yearly basis, wow, this is definitely a great company in my opinion. And then if you see right here, let's take a look. They usually announce a dividend increase in March, June. They usually increase at their second dividend payment on the second quarter, right? So in June right now. So you should be getting in the next dividend, it should be of $1.88. per share pretty much in the next quarter. So that's gonna be nice. But if you see, look at that dividend growth. Wow. In 2015 they were paying 50 cents per share per quarter. Then 2016, 62 and a half cents. Then 2018 they were 75 cents. They increased it that year to 90 cents. Then 2019 $1.08. Then $1.25 in 2020, $1.45 in 2021, $1.65 in 2022, and then $1.88 in 2023. So, in my opinion, honestly, if I wouldn't have invested into Pfizer, I would have bought this one for sure. This one looks like a really, really good company. In the quick review that I just did, Matech, I do think that this was a great choice, in my opinion. Of course, none of this is financial advice, guys. I'm not a financial advisor. I'm just a regular guy that works two jobs, right? And I did not go to college for financials or financial to give financial advice. But this one, from what I see, honestly, it looks really, really, really good. Great pick, in my opinion. And I really, really like the growth of this company. So yes, I have to agree. Like every time it takes a dip, definitely add some. But I will, you know what, Matech? This one will be like a Visa, right? That even if you add now at all-time highs with the way it's going, right, in the last 5 years and even in the max, and the business just continues the way it is going, whatever price it is at right now and whatever price it is in the next 6 to 9 months is going to be cheaper in 10 years from now. That's if you're planning on holding the company long term, right? If you're taking the Warren Buffett approach, which is buying here and then just hold it until you are all the way up here, right? Then yes, this is definitely a great company. Maybe even one that I will probably want to add in the future. You just never know, right? I like the healthcare sector. In my second job, I pretty much I work in ambulances part time, so I'm always interested in the healthcare sector, honestly. So this one is one that I definitely like a lot. I'm gonna do some more research, Matech, for sure. I really appreciate your comment. I know that one is in some of my ETFs for sure, but it looks like one that is definitely will be nice to own as a single stock. It looks very safe to me, in my opinion. Of course, none of this is financial advice, but definitely a great company, in my opinion. All right, so let's go right into my portfolio. And this one, Vici, I want to continue growing this position. It is a little bit above my cost, but I'll probably buy another $5 of this one also. I'm probably gonna leave it for last. That one with Kenvue. Kenvue, I've also been buying $5 on a weekly basis. I want to continue growing that position a little bit more. So I'm down 9%, but I really like Vici. And I like Kenvue. Starbucks is one that is in the positive right now. I'm in the positive by 4%. I bought, I think it was like $10 last week. I'm going to try to do something similar this week. I really like Starbucks as a company just because they have their products out there. So that's one of the things that I like. And I always see a line at every Starbucks that I go to. I rarely see a Starbucks that is empty. I guess only if it's not a coffee time hour, right? But usually at lunchtime, they're packed. In the morning, they're packed. And sometimes in the afternoon, I see people just going into any Starbucks. And then my last one, MPW, I'm in the red right now, 64%. I'm not gonna be buying anymore anytime soon. I don't know. I gotta do a little bit more research into MPW myself, actually. I feel like let me do some research into MPW. Maybe I'll buy some more in the near future, but I don't know. They're down too much. Will they recover once interest rates start getting cut and they fix their issue with their tenant that is not paying rent? I'm hoping they do. I really hope they do, so I can continue to hold MPW. As of right now, I am not selling. I'm not selling at a loss. If I lose everything, I learn from this one. If I do get some nice gains in the near future or in the future, maybe in 2 years from now, I'll get some nice gains. I'm okay with that. Then Visa is gonna be one. It's at all-time highs right now, pretty much almost at $277. I am gonna be buying some more Visa. Most likely, I'm gonna be taking $20 from that cash that I have, and I'm gonna be buying $20, so I could continue building that position. I told you guys the challenge with Visa is no matter what the price is at, I'm going to be taking the same approach as SCHD and VYM. I'm going to be buying a $5 minimum of Visa on a weekly basis every Friday in 2024. So any video that you see that I forgot to buy Visa, please let me know, and I'm going to have to buy double of what I was going to buy that week. So please burn me in the comment section. Tell me, hey Jay, you forgot to buy Visa this week. But definitely I'm gonna be buying some more Visa this week. Yes, I know it is at all-time highs, but I really like the company. I like the research that I made on my time off. I made some more research, and I really like the growth. I really like UNH, honestly. UNH looks really, really good. Also. So that is one that maybe in the future, I don't know. You never know. Maybe that one will be replacing MPW in the future, right? Maybe can replace this spot right here. What do you think? Please leave me your opinions in the comment section about today's video. I really like to read your opinions in the comment section. So please leave me your opinions. I respond to them personally. And you guys know that. Randy, Legendary, Maytech, Christopher, Bio, everyone. Please leave me your comments or your opinions in the comment section. So many of you, I really appreciate your support. And yeah, pretty much this is it. Please don't forget to hit the like button. Subscribe to the channel so you can continue to support the channel. I'm almost at 500 subscribers. I forgot to mention that at the beginning of the video. I'm almost at 500 subscribers, so I'm going to be changing my profile picture. I see the growth of the channel, which I really, really appreciate, everyone. And nothing. I'll announce it on the next one on Sunday. All right, everyone. Have a nice day, and I'll see you on the next one. Thank you. Disclaimer, I am not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.